In today's video, I'm going to be sharing with you the easiest way for you to understand how to trade Forex. That means I'm going to be showing you how to trade Forex as a beginner in this video. Now we're going to be using these 5 parameters that I've written here to understand how Forex work or how to trade Forex in 2024. But before we go into that, if you're seeing me for the first time, my name is Divine, and what I basically do on this channel is document how I trade and as well show you the mindset behind my strategy. If you want to see content like this, I want you to like, subscribe, and as well drop a comment. I'll be right back. Now, the first thing we're going to be looking at is what? Forex trading. What is Forex trading? What should come to your mind once you hear Forex trading? Now, the first thing that should come to your mind once you hear Forex trading is what? Buying and selling of currency pair. That means the first thing that should come to your mind, first of all, is to understand that Forex trading is simply the buying and selling of countries' currency pair. That means you're simply buying and selling currency pair. Now, what is currency pair? Currency pair is simply the pairing of two different countries' currency together. For instance, if you're in the USA, you are going to be using what? USD. And if you're in China, you're simply going to be using what? JPY. So this is what? Currency pair. You're simply pairing two different currency together to become one. So once you hear Forex trading is simply the buying and selling of a country's what? Currency pair. And how is it paired? You're simply using a country's currency and another country's currency to pair it together to become what? One. That means once you hear pair, you're simply having two in one. And that's what you call what? Currency pair. So Forex trading is simply the buying and selling of a country's currency pair. Now, who can trade Forex? Who can trade or who can buy and sell currency pair? Any one of us can buy or sell currency pair. For instance, I can buy and sell, you can buy and sell, governments can buy and sell, banks can buy and sell, different person, anybody at all can buy currency pair. But once you come to the forex market, is either you are a retail trader or you're an institutional trader. That means there are two categories of people in the forex market, the retail traders and as well the institutional traders. And me and you are referred to as what? Retail traders. And the banks, the governments, the hedge funds, are referred to as what? Institutional traders. Now, what's the difference between the institutional traders and the retail traders? Now, the institutional traders are simply the one who use big money to trade. That means they use large volume of money to trade in the forex market. Whereas retail traders are simply all that use little money to trade in the forex market. So no matter how much you have as a retail trader, you're simply using a very little money compared to what the institutional traders are actually using. So basically, if you're asked who can trade the forex market, what should come to your mind is what? The retail traders, me and you, and the institutional traders, which are the banks, the government, and the rest of them. Now, how does forex trading work? For you to understand how forex trading works, you simply need to understand technical analysis and fundamental analysis. Now, fundamental analysis is what tells us where we're going to buy from using what's going to happen in the future. Why technical analysis is simply what tells us where we're going to buy from or sell from using what has happened before to understand where we're going to buy from. So if I'm to explain it very well, if I'm to define it very well, I'll simply tell you that technical analysis is simply the use of previous price data to understand where price is likely going to buy from or sell from. Now, fundamental analysis is simply the use of future price data to understand where price was likely going to go from or where price is likely going to sell from. Do you understand the difference? You're simply using previous data to understand where price is going to buy from or sell from in technical analysis. Whereas in fundamental analysis, you're simply using future price data, which can be economic data, it can be events, it can be election, to understand where price is going to buy from or sell from. Two different things. Now, there's a way to do this stuff. There's a way to use this analysis, or there's a way to use these two analysis to understand how to trade Forex. Now, I'm going to be sharing with you a particular video where I explain how to use technical analysis to understand markets or where to buy from or sell from. I'm going to attach it at the end of this video. All right? Yes. Now, what are the terms you need to understand for you to be able to trade Forex? Now, there are basically about 3 major terms that you need to understand for you to be able to understand how to trade Forex. Number 1 is what? Currency pair. Number 2 is what? Leverage. And number 3 is what? Lot size. Now, these are the basic things that you need to understand for you to know how to trade Forex in 2024. You simply need to understand what currency pair is, you simply need to understand what leverage is, and you simply need to understand what lot size is. Now, I've explained to you what currency pair is, but I'm still going to expatiate more on what currency pair is in this phase. Now, currency pair, like I explained before, is simply the pairing of two different currency pairs to become one. For instance, I gave you that USA uses US dollar and China uses what? JPY. You're simply pairing this to become a currency pair. This is a currency for this, and is now a currency what? Pair. Now, there are two major types of currency pair. You have the minor currency pairs, and we have the major currency pairs. Now, the difference between the minor and the major is that any pair that has USD attached to it is referred to as a what? Major currency pair. And any pair that does not have GBP USD or USD on it is simply referred to as what? A minor currency pair. And now, once you see a currency pair, there are basically about two things that is involved in that currency pair. Is either there's a base and there's a quote. In fact, whenever you say currency pair, there's always a base currency pair and there's always a quote currency pair. Now, how do you identify the base and how do you identify the quote? Now, the first currency that appears first of all is always referred as what? Base. And this is what? The quote. So for every currency pair, there's always a base and there's always a what? A quote. The first one that appears first of all is referred as the what? The base. And the next that follows it is referred as the quote. So every currency pair you see has a minor or a major currency pair. It's either a minor currency pair or a major currency pair. And for every pair, there's simply a base and there's simply what? A quote. Now, what is leverage? Leverage is simply what allows you to get more done. Let's for instance say you want to go from here to here and you have to use a leg to go. If you use a car, you have leverage on that car to get from where you need to be quickly and easier. Let me say that again. Leverage is simply what allows you to get something easily done. For instance, if you want to go from here to this point, you simply want to use a vehicle or a car that will easily take you from this point to this point. If you use an airplane, you have simply used a bigger leverage to get from this place to this point easily. Alright? Now, what is leverage in Forex trading? I'm going to explain that for you right now. Leverage is simply what allows you to be able to use a smaller money to make a bigger money. That means leverage is simply what allows you to use 1 to make 5, 4, 6, and even more. That means you're leveraging on a particular stuff or a particular thing for you to move from here to here. That means in Forex trading is simply leverage in Forex trading is simply you trying to leverage on a particular leverage that is available in the market to become or to make more money. And it's very risky. You can easily lose your money and as well you can easily make what? More money. Alright? I'm going to be explaining more of this in my subsequent video because for you to understand this is very, very broad and I'm going to be explaining this for you in my subsequent video. And the major thing you need to understand is that leverage is simply what allows you to be able to move from here easily to this point easily. That means in Forex trading, leverage is simply what allows you to be able to use maybe $100 to make more money, like $500 or even $200. For instance, I explained to you that for you to move from here to this point, you simply need to use a car to move from this point to this point. Now, if you use an airplane, you have leverage on that airplane to move from this point to this point faster and easier. Alright? Now, what's the lot size? Lot size is a risk management tool that allows you to know how much you're going to make and how much you're going to lose in the market. That means once you hear lot size, it simply tells you the size of money you're going to make and the size of money you're going to lose. Alright? Now, how does lot size work? You're simply using a particular amount of lot size that is going to worth a particular amount to trade the Forex market. And we'll have 3 types of lot size. We'll have standard lot size, we'll have the mean lot size, and we'll have the micro lot size. That means if you use a micro lot size, you're simply using a smaller amount of lot size to make a particular amount of money. If you're using a mean lot size, you're simply using an amount of lot size that is bigger than the micro lot size to make a bigger amount of money. Now, if you use a standard lot size, you're simply using a bigger amount of money that is bigger than the mean lot size to make a bigger amount of money. So lot size simply tells us the size of a position I'm going to use and how much is likely going to cost. Remember, we'll have 3 types of lot size. We'll have the major lot, you have the micro lot size, we'll have the mean lot size, and we'll have the standard lot size. The standard is bigger than the mini is bigger than the micro. That's what you need to understand hear about lot size. Now, the next thing is simply, what app do you need to use to trade the Forex market? Now, there are basically about 3 apps that you need to use to trade the Forex market. Now, the first one is referred as TradingView. Second one is referred as MT4 or the MT5. And the last one is simply the Brokers app. Now, I'm going to be explaining to you what this app are and how you can use them. But first, TradingView is simply an app that allows you to analyze the market technically. That means you're simply using what's happening on TradingView or what chart is showing you on TradingView to analyze what price is likely going to do using a strategy, and as well analyze to know where price is likely going to go to. Now, after analyzing, you want to execute what you've analyzed. MT4 is simply the app that you're going to use to execute what you have actually gotten on your TradingView, as well make money or and as well input all you've gotten on TradingView into your MT4. So basically, TradingView is simply for analyzing the charts, whereas MT4 is used for what? Executing the charts. Now, what is the Brokers app? Now, the Brokers app is simply like your bank account app that you deposit in money and withdrawing money from your Brokers app. Now, it can be any broker you're using. It can be FXTM, it can be XNET, anyone you want to use. They always offer you an app that can you can use easily to access your withdrawals and as well your deposits. All right. Yes. So basically, to conclude or to round this up, what you simply need to understand about Forex trading is simply to understand what Forex trading is, how to trade Forex, and most importantly, how does Forex work. And I explained to you that for you to know how to trade Forex, you're simply buying and selling particular currency pair. And for you to know where to buy or sell, you simply need to have a technical analysis strategy that you can use to buy or sell a particular currency pair. And it can be technical analysis or fundamental analysis. And I explained to you that for you to understand Forex as well, you still need to understand these 3 terms, which is what? Currency pair, leverage, and lot size. And I told you that currency pair is simply the use of is the pairing of 2 different currency pairs to become one. And leverage is simply what makes you easily go from 1 to 100 or from 100 to 200. You're simply leveraging on leverage that the broker gives to you to go faster and easier make money or easily make money in the Forex market. And I told you I will have lot size. What tells you how much you're going to make and how much you're going to lose in the Forex market. And they're into 3. The mini lot size, micro lot size, and most importantly, standard lot size. I think this will be all for this video. I'm going to see you in the next video. Peace.